Sandeep, what is backwardation in general?
Backwardation in general is when the spot price of whatever you're looking at is trading at a premium to the nearest future price of whatever you're looking at.
Yeah, and do we sometimes see this in the gold and the silver markets?
We do, and we've been seeing it occurring a lot more frequently over the past 4 years. But it isn't something that shouldn't. It's something that shouldn't occur in the gold and silver markets. Effectively, a sign of backwardation is like a sign of shortage. Mm-hmm. And shortage as such in the monetary metals shouldn't be there. These things exist in very large volumes already. Once gold and silver, more so gold, once gold is produced, it just sits above the ground. Mm-hmm. So for something like gold to be becoming scarce means that people's intentions with gold are changing. They're not willing to use it in exchange. They're starting to hoard it. And the current prices are not sufficient enough for them to dishoard it at the moment. And backwardation is like a sign of that.
Yeah. Do you think that a permanent backwardation in gold and also in silver would be the sign for an end of the paper market?
No, it's a slight refinement. Silver has been in permanent backwardation for probably close to 2.5 years now, depending on which contract you're looking at, and it hasn't caused the silver market to default or anything like that. You would have to say a permanent and rising backwardation. Mm-hmm. Just like Professor talks about a low and falling interest rate structure being detrimental to society, the flip side of that, if you go through the logic, is that you will have a permanent and rising backwardation. So we're not in the rising stage of the backwardation yet, just at the coming to the permanent stage.
But do you foresee this for the future?
I do, but again, its occurrence hinges on people keeping their accounts in gold and silver terms as opposed to fiat currency terms. And that is a personal preference, subjective preference obviously, and I imagine it will have a lot of inertia against it. People do not generally think in terms of ounces of gold when they're looking at the stock market or the property market. They don't think in ounces of silver. They're quite happy thinking in dollars and euros and pounds, even though these don't have a definition at the moment. So slowly, as people become more aware of what's happening, and as the integrity, the quality of the credit is called into question, then people will start keeping their accounts in gold. Now that might happen in 2 years' time, or 10 years' time. I favour more the latter than the former at the moment. So yeah, it will happen at some point, but when, it's hard to say, because it's a collective conscious decision to change, basically.
Yeah. All these interventions in the precious metal markets, do they make it much more difficult for you to analyze what's going on there?
Well, no. I mean, first of all, you must remember that on a particular side of an intervention, there might be an over-the-counter side that you don't see. And it's very hard to manipulate the carry in the gold market. So manipulating the gold market by just shorting naked futures, for example, would be exposed very, very quickly. You know, it's the way that it's done is a bit more subtle than that.
Can you explain?
Well, I mean, and I'm not saying that this is what happens, but this is what could happen. If you are an underwriter of gold futures, you buy physical gold and you sell futures, and then with that physical gold you put it on the leasing market. Now, as long as that lease the gold is returned from that lease ahead of the expiry of the futures contract, everything is legitimate. Now, if the person that holds the futures contract is never willing or wanting to take delivery of the underlying gold,
or able,
Yes, very good point. Because a lot of funds, a lot of institutions aren't allowed to hold physical gold. If they know that that person will always roll to the next contract, you could have actually lent the gold out for a much longer period than you've got the futures contract written for. It's a kind of borrowing short to lend long, but flipped on its head in the futures market, as it were. So it's not like the gold isn't there, but it might be just a claim to gold. So as we know, gold and a claim to gold are two slightly different things. So it might happen at some stage in the future, if COMEX defaults, which there's no sign of at all at the moment, that instead of futures contracts being paid off in physical gold, they'll be paid off in a mixture of physical gold and claims to gold, which are to mature in however many months or years. But this is just pure conjecture, nowhere on the immediate horizon at the moment yet. But that's the kind of way that you can artificially keep the gold price lower than it naturally would be. But then if you're doing that, then the gold price is likely to flip and be artificially higher. You can't have your cake and eat it,
Yeah. But if we would have a free gold and silver market, where would you see the price?
If we had a free gold and silver market, then it's hard to say, because you still have fiat currency. You have fiat credit, and you have to make a guess as to where you think the volume of credit will start contracting, or what that will do. So it's very hard to say that. I don't think that if we had a truly free market, then gold and silver would be money, so they wouldn't change at all. Obviously, the ratio between them might change, the exchange ratio between them might change. But asking the question, if the market if the market was free, where would the price be? Well, it's hard to say, because there's still a lot of stuff in the economic system. First of all, it assumes that markets aren't free at the moment, which of course I would say that they're not. But to say where it would go to, it's impossible to say.
But why would you say gold is not in a bubble?
Why would I say gold isn't in a bubble?
Yeah.
Okay. You must remember that it's gold that is constant, and everything else that is moving around it, and there is no depth to which the integrity of a fiat pound or a fiat dollar can go. There is no depth to how low they can take the quality of this going forward. So flip that on its head, there is no limit to the price of gold in these units. So to say that gold is in a bubble is incorrect. You should be saying that fiat credit is in a never-ending depression, and it won't end. So saying that gold is in a bubble just by looking at the price compared to dollars or pounds or euros doesn't mean anything. And a lot of very influential, important people say this. They get confused that gold doesn't move, it's the credit around it that moves. Gold is constant. So there are other ways to show that gold isn't in a bubble. You can look at the price of gold, the price of property in gold terms, or the price of commodities in gold terms. And if you look at a commodity price chart over let's say the price of sugar, the price of corn, the price of coffee, the price of cotton, all of these things have been going down in gold terms since the 1950s. So you've got lots of things that say, when you compare it to gold, that it's not overvalued yet. If anything, it's still heavily undervalued. You take an average London house, Greater London house might cost £500,000, okay, and that is £500,000 would be about 500 ounces of gold, something like that. Now, a good house, an average house in Greater London never used to cost 500 ounces of gold, 50, 60 years ago, or even 100 years ago. So there are more objective ways of showing that gold is not in a bubble by comparing it to other asset classes in that respect. But you must never make an argument of gold being in a bubble by looking at its price in a fiat currency. Mm-hmm. It doesn't make sense.
Okay. Let us switch to the geopolitics of gold. Why are the Russians and the Chinese buying big-time gold?
Oh, well, I imagine because they're smart individuals. What's funny is that China is the world's largest gold producer, yet they're still importing gold on the open market. Well, these countries do have large claims to dollars, and claims to dollars as well. And I imagine that having a long history, a multi-millennial history in China's case, that once bitten, twice shy. They've had experience of this kind of thing over centuries. So it's probably a way of hedging that large asset base, in inverted commas at the moment.
Would you say that it could be that the Chinese go to a bimetal standard?
No. I mean, I think for any currency no currency I think is going to be fixed against gold or silver. That would be a very big mistake. And to try and manage, going back to a gold standard for us at the New Austrian School and the Gold Standard Institute, it's not about fixing fiat currency to the gold price. It's about using gold as the measure again, introducing a new gold unit, a new silver unit.
Okay, but what does this mean?
So, for example, it could mean exchanging all of the fiat credit of the United States, government credit of the United States outstanding, and exchanging it with gold-denominated credit. So you could do a straight swap, for example, and the unit of this bond would be a gold eagle, and a gold eagle is defined as maybe an ounce of gold. But the point is that it's bringing in a parallel instrument, a gold-denominated instrument, to act in unison, not unison, but act in a parallel way to the currencies that are already there. And the most marketable thing, and that's just the first stage. There are other stages to go on after that, but that would be the first stage. And then eventually you'll get to a stage where you'll have all of these competing currencies, but the most marketable currency will survive. And I don't think there will be many arguments to say that it will be gold and silver. So do not disturb the system as it is. You cannot do this Churchill-type thing about trying to get all currencies back onto a gold standard at $35 an ounce or something like that. That will cause a huge depression and collapse of the system. You just let things run the way they are. Try to rein in the deficits. You should start consuming less than you produce. It doesn't matter whether you measure that in gold terms or cowrie shells, you still have to do that. Then introduce this bond swap thing, this gold bond swap idea, and that will be the first stage.
Yeah, but isn't it interesting that we see a proposal from Germany to back the bonds in Europe with gold?
I think that would be a very sensible idea. I mean, if the new, whatever it's called, the new agency that creates Central European debt, I think it would be a good idea if they confiscate all of the gold reserves of the member nations and put them in that institution and use that as cover for any bonds that are issued.
Yeah, but some countries don't have their gold reserves at hand.
That's true. They might have claims to gold from having lent it out.
Yeah.
Those would do.
What is your opinion about about the arrangement between India and Iran, that India pays for Iranian oil in gold?
Well, first of all, India and Iran have a very long history, and Persia, as I prefer to call it. Persians ruled over India for many centuries. So you must look at the context of India and Iran doing business with each other. Exceeds by many thousands of years how long the other countries have been on the planet, which I don't think is empathized with enough. So that is the background behind them wanting to do this. I don't have any problem with this, because the reciprocal arrangement was paying for food with gold from the Iranian end. So gold doesn't actually move. It stays at each end. It's just being used as the measure for whatever so nothing is no dollars, euros, or whatever are being involved in this transaction per se. But these goods are being measured against gold. And the gold doesn't go from India to Iran, and then when the food shipment from India to Iran is happening, go back from Iran to India. It would just sit there in each country, and only the margin would be exported to each other, the marginal trade balance or whatever. And I don't have a problem with this mechanism at all. But as for whether it's morally correct in the context of America, etc., etc., I don't really have a comment. I don't really know about Iran's current political situation. I do know about their current political situation, but I don't know any more than that.
Yeah, but you know they were kicked out of the SWIFT system?
They were. I didn't know. I knew there was the threat. I didn't know that they have actually been kicked out of the SWIFT system.
Yeah.
Right.
So what can they do?
Well, it looks like gold and possibly silver might be the only alternatives to being able to do trade. They're forcing Iran to become a barter economy again with all of their trading neighbors. But Iran and her trading neighbors are finding ways to bypass this. And it'd be interesting to see what laws will come up at the margin to to stamp out this. I don't know, because it's very hard to stamp out what they're doing, because gold is not moving. It's just being used as the mental measure of whatever they're exchanging between other. So what are you going to do now? Are you going to say, well then Iran, no trade with Iran, full stop? You know, I mean, I don't know how it will evolve, but it's going to be very interesting.
Yeah. Do you have beef with digital currency?
Not at all, no. It's not something that I have thought about in great deal. I do not have beef with digital currency. I've been reading various sort of bits and pieces about something called Bitcoin. Sounds very interesting. And I think the thing to remember is that as long as these things are mutual in terms of people wanting to use them, and there is a defined way, and it's all subjective, then there is no harm in it. You know, let them use it. But the whole point about it is that it comes down to marketability. And if you want to use this outside of that set, it would be a lot harder to do it. That's the only thing.
And you do not have a problem with complementary currencies either?
No. At the end of the day, you have to go back to Menger and the concept of marketability, and the most marketable thing will survive. That's guaranteed.
Okay, now that you mention Menger, there is some kind of controversial debate going on between the new Austrian Economics School and the Goldstein Institute and Menger and Mises.
Yeah.
And, well, first of all, have you been forced to resign?
I found that it wasn't compatible to be there, and there would have been an element of that in it for sure.
Yeah.
As for the reasons, I'm not really in a position to comment. I think you probably more have to ask the management there. But I remain friendly, and of course, we both have an end in mind, you know, and we're not antagonistic towards each other at all.
Yeah.
And as for Menger versus Mises, this has blown up into a very huge debate, and I do read the comments of people who've watched my appearance on Max Kaiser's television show. It's the nature of Mises' methodology is just not compatible with the nature of Menger's methodology, and you can either grasp this concept just by looking at Menger's development as an economist, as a historian, or you can't grasp it. And the way that I like to point out the difference is that I'm a mathematician by training, and you have to know the context of whatever equations you're using. You have to know the context in which they're valid. So, for example, the equation for the frequency of oscillation of a pendulum is only valid in uniform gravity, and if the oscillations are infinitely small. Now, if you try and bring that to a realistic representation of a pendulum, there is no pendulum that is quite like that, you know. Mm-hmm. So the mathematician realizes that what he calls laws are only valid within a certain context. Okay? Now, as a human being, you have no idea what your context is in order to make laws. And this is something that Menger realized. Mm. You can never know your context. You can never know your true self. And that is a fundamental difference in methodology between Menger and Mises.
Okay, what does Mises say?
Mises says that you have to introduce, and he actually apologized for it, a form of methodological dualism. Okay? Menger said that there is no difference between the natural sciences and the ethical sciences, except for one of degree in terms of methodology. And as a mathematician, I can empathize with that statement. For someone who doesn't have any training in science or engineering, it would be very hard to empathize with that statement, because a mathematician at each stage knows what he's doing is trying to be a kind of deductive way of figuring out his surroundings. He has no idea about the true nature of his surroundings, but he's trying to make deductive guesses at it. You know, and that is the difference that I think Menger realized as a grounding point for philosophy, as a grounding point for economics, that Mises did as well, but he didn't want to use it as the only axiom for the development of his economics. Mm-hmm. Now, as a consequence of that, you weave into your economic theory various things that are not congruent with Menger's only axiom. And Menger's only axiom is that value doesn't lie outside of your consciousness. And then you have the postulates of increasing marginal utility and decreasing marginal utility. Yep. But the difference between a postulate and a theorem and an axiom is used very interchangeably with an economist. But the mathematician knows the degree of intent behind each one. Mm-hmm. Newton's law of gravity is not a law, it's an observation of gravity.
Karl Denninger said that you questioned a certain kind of orthodoxy in your interview with Max Kaiser, and you were punished for it. Are you happy with the
Absolutely.
interview?
I'm perfectly happy with what I've said. as is, and Professor Fekete is certainly not in disagreement with anything that I said at all.
No, he defended you against the thought police.
Against the thought police. And I think that is an important point to grasp, is that my culture is Indian. Again, it's many thousands of years old, and the concept of active debate amongst intelligent people is what drives one to the truth, not telling people that they can't think in a particular way. And so I'm not unhappy at all. I'm more than happy to express what the new Austrian School stands for. And I'm not upset with it, no.
Okay. Now, there was one quote that I found interesting, and this is, "Money is the universally acceptable ultimate extinguisher of any debt, and as far as I can tell, fiat credit, which is the system that we have currently, doesn't fit that bill." Well, that's a revelation for most people. Can you elaborate on this?
I can. Again, there was a lot of misunderstanding about this statement. Sort of people assumed that every payment would have to be made in gold coin or something like that. By ultimate extinguisher of debt doesn't mean that it's the only extinguisher of debt. You know, if we are under an unadulterated gold standard, which I encourage people to look up on Professor Fekete's website, if you are in an unadulterated gold standard, and someone has an obligation to pay you back a debt, then gold would be the you could not refuse gold, is what I mean by ultimate extinguisher of debt. That doesn't mean you would refuse, let's say, a gold-denominated bill of exchange, which matures into gold in 20 days or 30 days. And in fact, the vast majority of payments under an unadulterated gold standard will not be made in gold coin. It will be made in gold-denominated bills of exchange. So fiat credit is obviously nothing to do with this system. And when you think that you've paid off a debt, you might have paid it off yourself, but in actuality it gets transferred to the balance sheet of another bank and ultimately the Federal Reserve. And the credit remains in the system outstanding. So you can't pay off debt with debt, basically.
Yeah. Then there was this article by Paul Krugman recently in the New York Times, Gold and Instability, and he says basically gold isn't stable. And there are two things that I would like to ask you about. The first thing is, he said, if we would have a gold standard operating in this crisis, there would have been powerful deflationary forces at work. Is this true?
Well, the way that Dr. Krugman's phrased that question is so loaded anyway.
That's my question.
Oh.
I just... that's a quotation.
Yeah, so this is what he said, operating in gold... Yeah. First of all, we need to know by what does Dr. Krugman think? What does he mean when he says a gold standard? Because it's probably not what we mean when we say gold standard. So that's a very important point to grasp. And yes, we would, but that's because every country is in deficit at the moment. That has nothing to do per se with gold, but just bad housekeeping. If you are in deficit under an unadulterated gold standard, then you have to start liquidating assets at some point, because you have to pay for the marginal bit which you didn't produce but you want to consume. So I'm sure that, of course, some assets under that situation would fall in their gold exchange value. But it's nothing to do with gold, it's to do with the fact that you are consuming more than you produce. And if that happens, it would still happen whether you measure it in cowrie shells or gold or fiat dollars. You know, it doesn't matter. The concept of still consuming more than you produce can be measured. Doesn't matter how you measure it. And of course you will have deflationary sort of forces, as it were, even though deflation is not a...
So you wouldn't accept this as an argument against the gold standard?
No. It's like saying there isn't enough gold to go back onto a gold standard. That's like saying there aren't enough rulers to go, or there aren't enough meters to go onto a metric standard. It doesn't make any sense. They're thinking in the wrong dimensions. Mm-hmm. So it's a common mistake, and it's prevalent everywhere.
Okay. Furthermore, Paul Krugman wrote, the gold bugs will no doubt reply that under a gold standard, big bubbles couldn't happen, and therefore there wouldn't be major financial crisis. And it's true. Under the gold standard, America had no major financial panics other than in 1873, 1884, 1890, 1893, 97, 1930, 1931, 1932 and 1933. Your take on this?
Yeah, I mean, obviously we've never had an unadulterated gold standard. If you have a gold standard and you're mixing the maturities of your obligations, you're borrowing short to lend long, then you will have financial crises. We've never had an unadulterated gold standard. We've never had a monetary system where credit has not been extended for the purpose for which it was brought into existence.
Yeah.
Credit, gold-denominated credit, on a short-term gold-denominated credit was used for long-term projects. And that is the cause of crises. Nothing to do with the fact that you're on gold. It's if you put in your money in a demand deposit and they invest that demand deposit into long-term securities and you want your money back, then they have to sell the securities. But then they shouldn't have put the money in the securities in the first place because it was meant to be on demand.
Yeah.
So this Krugman is confusing bad custodianship of the gold standard, which we've had since the times of the Venetian bankers, with gold itself.
Yeah. And isn't it also a problem in those crises, like for example 97, with the F word, fraud? And absolutely. I mean, there was the talk of Argentinian railroad bonds in the 19th century in the UK, and that brought down a very famous bank called Barings Bank, and they had put all of their mid-short-term demand deposits into these Argentinian bonds to build railroads. And I was in Argentina earlier this year, and I was asking, so where are these railroads that nearly bankrupted the whole of the Barings Bank? They're not there. You know, it's like business comes first, mutual interaction to do business, and the gold bill is just a representation of that business. You don't issue the bills and then hope to do business to fill the bill. Yeah.
Do you see what I mean? And everyone who examines what they think was the gold standard is looking at a flawed running of the gold standard, which caused all of these crises. And that was due to human nature, buying securities which they shouldn't have been buying, and not consulting with their depositors. It's the banker is merely the market maker between borrowers and lenders in the most basic sense. He's the servant of the depositor, not the commander of the depositor's monetary resources. And people like it. People should like it that way, but they don't. They would rather have someone else take responsibility for their money rather than we as individuals saying we have surplus money, I would like to put it to good use. It's up to us to determine what is a good use, and do it via a bank or not do it via a bank, you know. But the bank is just a market maker, and as anyone that manages funds or is a fund manager will know, you know, market makers can tell you a lot of information, you know, but you don't get long-term trends from them.
Since we addressed some myths, a free market, does it function proper without regulation? Or isn't this crisis with all the fraud an expression that there needs to be regulation?
Well, I'll go back to a very broad concept here of common law. And, for example, in the UK we have a system of common law, which is a case of you do not have laws until there is the need to create them, as it were, from the outcome of a circumstance. And this is in diametric opposition to creating laws ahead of something actually happening, or ahead of anticipated fraud.
We have some laws, but they are not enforced.
Well, that's different from having the laws is different from enforcing them.
Yeah.
So you have these. If people are honest, noble in character, are not willing to screw their fellow man, which I admit they are big ifs, then the system of common law is the only one that works, because we are all sentient, intelligent beings. If you start trying to make laws in anticipation of what we'll do, then the problems will arise, because they will find ways to weave around those laws. It's like, oh, I didn't even think of that. Mm-hmm. That was a way that I could commit fraud, but now you've told me how I can weave around it by creating the law against it, yeah. Which is very much the sort of American system. Even though it's American the American legal system is common law, it's sort of been warped dramatically.
Yeah.
You know, so I
But now that we have this fraudulent environment,
yeah.
How do we navigate through it?
I would not be one for saying that we need more regulation. I would not be one for saying that the regulation we currently have needs to be more accurately observed. I think we just need to think carefully about what we make laws about concerning finance, and that would probably lead to a reduction in the amount of regulation, in my view. But those laws that you will have are so fundamental and beyond sort of debate that everyone would naturally stick to them. I don't know what they are. I really haven't given it much thought. But I would certainly not be one for more regulation. I'd be one for encouraging more noble behaviour, which is a very personal thing, and I would encourage people to stop looking for someone else to blame, because that's the concept which causes most division.
And would you also encourage more really good financial education?
I would, but that restricts it to the new Austrian school.
So that people can judge more properly what's going on.
Yes, and I'd like the people generally to become more aware of what's going on, because there's this sense of, I feel that there's this sense that people are not aware, and they're doing it willingly because they've got everything that they want. They have the Mercedes, the house in the south of France, etc., whatever, kids at private school and whatnot, and they don't question because they have all of their ends satisfied. But they don't realize that this could be taken away in an instant, and they'll have no idea why it happened. So it really does we have to turn the problem back into an introspective problem, not a problem in the realm of anyone apart from me. You have to turn it back introspectively. Mm-hmm. So my abiding philosophy has always been, well, we all get what we deserve. There's no one else to blame per se.
Okay, that's a good last word.